All right, I'm going to go ahead and show you how all of these are correlating going into these moves because I'm not really doing that much in the market right now while it's just sitting here. But if you look at DXY on the monthly chart, we started a 5-wave move in May of '08, and I'm guessing I wasn't trading back then, but I'm guessing that's around the start of the crash in '08. And then we started there. We got the first wave. We got ABC for the second wave. And then we melted up for the third wave into February 2017. And then Trump came in office. And we came down here. And then this is the Corona crash. We went back up. And then we went back down for the rest of Trump's stay in office. So that was an ABC pattern for the fourth wave. And so we're on the fifth wave of this move. Within this move, we are on the third wave. So for the fifth wave, we have 1, 2, 3. We should get a fourth wave down here somewhere between 100 and 101. And then one more move higher to maybe 106 to 108. And as you can see, this correlates perfectly with the market right now. The move started in June of 2021, but it only started getting really bad somewhere around in here, and then we just went straight up from there. We've been going straight up pretty much for the last 4 or 5 months. And as you can see, we're overbought here on the monthly time frame as well. But I think that will stay overbought. We'll get a little bit of a correction, and then we'll probably go a little bit higher. And once we hit 106 to 108, maybe 110 at the most, that will be the end of the overall first wave. And as you can see, this is a first wave because if you know anything about Elliott wave, if it bottoms below anything, you start over. So we have 1, 2, this is the very beginning right here. So let's say we get to 106, 108 for the overall first wave. Where would we correct to? We would correct to 88.64 all the way to 84.55. We would correct below the point of where Trump was in office. So think about that from a standpoint of where we're at in the market right now. We're still at 400 on this point. And after this move, which would probably take it could take a few more months to finish this. It could be another 6 months for the last 4 and then 5. You think about this is all the way back from '08. But how does this correspond with the overall market then? We've been crashing for off and on since we hit the high in January. I think it was the start of January. Gone straight up. So a third wave, that's the reason we're pretty much parabolic on the third wave. So we get a fourth wave, fifth wave up here for the overall first wave. So this is kind of corresponding to the melt up you've heard about from different people talking about what the market's going to do this year. And when we do hit the top of this and we start fading on the dollar, the market is absolutely going to mark up or melt up. And so right now, based off this and where the market's at now, I told you this probably is not going to go below 394. It's just hanging around here right now. We're probably going to get a bounce around the same time that the dollar begins its fourth wave on this last leg. And then when the dollar goes the fifth leg, I'm expecting it to go to 106, 108. If let's say we're up here in the 430, 440 range, that's when we'll go down here to 370 to 390, somewhere in that range to complete it all. So when we complete this move down here to 370, 390, we'll be at 106 to 108 in the dollar. And then the dollar will start falling, and then that's when, like I've been talking about for a while, the melt up will begin because the dollar will be falling, and so we're gonna have, we'll have higher prices across the board, so more inflation, but it could be quick too, though. This fall in the dollar could be like, maybe 6 months or so, and we're already down here to 89 to 84. And then the next move would take us all the way to like 1.3, 1.28, 1.3, and that's the point where we'll get a crash in the overall market. So we could get a melt up, maybe just 6 months after we hit 370, 390, and then boom, we hit this, and that's when the market crashes completely. And so we're not there for a market crash. You just got to look at the dollar here. We're not there. This will finish out, and then we're going to melt up when this goes down. And then the next move will probably be more of a market crash than we're doing right now. So I expect this to happen for a fourth wave in the dollar, and then a move down for the fifth wave. And then yields, they are getting close to being finished as well. We have finishing up the fifth wave here, probably somewhere around in this area, and then that will probably retrace. And I'm expecting this to kind of correlate with the dollars, maybe get up here to 3.3%, or maybe it's finished right here, and then it starts falling along with the dollar to 1.8%, all the way to 1.46%. And when that happens, that's going to help out the melt up if we do it pretty slowly. A crash is just straight down in the yields. But if we go kind of slowly along with the dollar falling as well, that should allow the market to melt up. And so if you think, if the dollar went to the lowest it went was 88 when Trump was in office in March of 2018. Where were we at in the market in March of 2018? We were only at 270, but look at that move since he got in office. Where do you know? It was March of 2016, pretty much straight up. We went up, what, 80 points, so almost like 40% we went up from this move down here to March of 18. So we went up 40% from this move to this move. So if we go from 106, that was 102 to 88. Now if we go to 106 or 108 all the way to 84, and the market only crashes to 370, we can do a little bit of math there. It's probably going to be like a 50% melt up. So what's 370? 100. That would take us to about 555 in the market. And that kind of goes along with what my targets are. If you look right here, I actually have them out right here. We have 542 all the way to 572. So just want to do a video, a little correlation on the long-term time frames on the dollar correlating with SPY and then the yields as well. The yields will probably crash farther. No, what's going to happen is they're going to go down and then they're going to go up with the market. And then when the market crashes, we'll see a big spike down. So just my overall thoughts on everything right now. So I'm looking for 370 to 390 being the absolute bottom of the market before we melt up in probably a short order within like 6 months or so for the market to hit mid 500s, probably something like that. So let me know what you think in the comments, but I think this is pretty likely, and I'm not going to say guaranteed, but very, very good odds of that happening. So look for a big move from SPY here in the next couple of weeks, along with the dollar falling back a little bit and yields falling back a little bit as well. All right. Let me know what you think in the comments, and please like and subscribe to help out the channel, and I'll see you in the next video.